Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, a very happy Wednesday. Now, in today's little program, I want to discuss, obviously, the CPI announcement we had just over an hour and a half ago and the implications that has on the market, and ask the question if the market is wishing upon a star, as well as talk about a certain earnings report coming out today, which ties in with that statement. And plus, I want to make a special announcement at the very end of this video. But anyway, before I get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, those of you who were kind enough to join me for the US CPI announcement will see that it actually upstaged Friday's NFP announcement. The reason why it upstaged the NFP announcement is because both were very volatile, but the CPI announcement seemed to cause a lot more volatility to the market than the NFP did. Which is still very volatile. Let's face it, it was a big surprise. The CPI was announced at 8.5% versus the expectation of 8.7%, so lower than expected. And if you bear in mind, the previous reading of the US CPI year on year for last month was at 9.1%. So that's quite a considerable drop from the previous reading. And US core CPI, which I said was, I thought the market was going to focus on an awful lot because it doesn't take into account energy and food prices. That was announced, again, better than anticipated, 5.9% versus the expectation of 6.1%. What I will point out, though, it was 5.9% last month. So there is no decline like year on year is. So though we can say year on year has declined because of lower oil prices, US core CPI, which doesn't take into account energies and food, has not declined. It's remained the same. But anyway, the market still sees it as a bullish event or risk appetite event because it is lower than anticipated. And across the board, all four readings was better or lower than anticipated. 8.5, like I said, year on year. US CPI month on month was announced at 0% increase. US core CPI announced at 5.9%, and US core CPI month on month a lot better again, a lot lower again at 0.3%. The expectation for that reading was 0.5%. So as it stands, US is looking slightly better at 8.5%. It was 9.1. UK still at 9.4. France at 6.1. Canada 8.1. Spain at 10.8. Australia at 6.1. And EU at 8.9%. So slightly better than the EU, better than the UK. That's for certain. So the question, obviously, with that number coming in a lot lower than anticipated, has inflation hit its peak? Now, like I pointed out, the core CPI year on year is still the same as it was the previous reading. Okay, it's only the year on year which is lower. That headline, right, coming at 8.5. That is lower, and that is, of course, obviously because they're saying they've had lower oil prices. Now, the way I look at it, okay, it is there's two ways I look at it. Okay, two ways I look at it. Oil prices are unpredictable. Okay, yes, we've had oil is struggling at the moment because of obviously fears in demand, but nothing will stop it again, possibly moving higher if we get supply concerns. Is it? So there is that factor. So then again, just because it's coming lower than anticipated doesn't mean this is, we're not going to see the likes of 9% again. Doesn't mean that's it by a long shot. And then the big question is, of course, what's the Fed going to do next? And this is what brings me on to the point I want to talk about. What's the Fed going to do next? Okay, and this is how the market, and we'll look at how the market's reacting and where the market is at the moment. And Inflation, okay. All right, I know everybody at the market's in a happy mood. Okay, it's lower than anticipated. It's lower than 9.1% last month, but it's still at 8.5%. That's still a hot reading. It's still 8.5%. Fed's target is 2%. It's 2%. So though 8.5, yes, it's better than expected. It's still 8.5, way above the Fed's target of 2%. And though, yes, we're seeing the market in a slightly bullish fashion, and we know the reasons why, because I've spoken about the reasons why a lot about this, is that, they think because they see it coming down, the Fed will not be that aggressive with interest rates in the future. But I see it as the opposite, because I see this result, along with the NFP reading on Friday, will give the Fed justification in their actions. It will give them the confidence that they're doing right. They're bringing inflation down. Okay, they're bringing inflation down, but they're not bringing it down for core, though, are they? It's only for the year on year because of oil prices. So I still think they're going aggressive. So I think the market, okay, yes, it is a bullish mood at the moment, but if they think for a second the Fed will not continue to be bullish and be aggressive with interest rates, I think they're wishing upon a star with that. I really do. I really think the market is getting the only other positive. The one positive thing I can see with this risk appetite on the market is this does potentially indicate with a good labor market, with reasonable, with the inflation showing year on year slowly declining, it does give us the indication that we could have a soft landing. What I mean by soft landing, well, there's two phrases they're using for the recession. Okay, one is a soft landing, so like a soft recession. The other one is a hard recession. Okay, so this is possibly giving the market a bit of hope of a soft landing recession. But either way, they are still going to be aggressive with interest rates. There's no getting away from that, because they are dedicated to 2%, and this would just justify their actions even more. So yes, they will. But the question is, of course, are they going to do 75 next month? I'd say, it's next month, September 21st is when the meeting starts, or will they do 100? I don't think they'll do 100. I think they would most likely do 75, because I think they will continue to be aggressive. And like I say, again, it is good data for the consumer. This is good data for consumer year on year. Okay, with lower oil prices, but they haven't lowered core year on year. Month core on core month is good though. So yeah, okay, yeah. So it's good. It's good in general for the consumer. But anyway, how's the markets reacted? Well, those of you who are watching it with me live, we went through several scenarios, and like I say, we went through scenario 5, where it came in a lot lower than anticipated, which it did, and the market had risk appetite rushed in. So the bulls rushed in, and as you can see on this candle here, this is the euro dollar. This is where it was trading just before the announcement, when the announcement happened, and the euro skyrocketed. It skyrocketed. It's attempted a bit of a sell-off, broke through that key level we've been watching for a while, 1.02921, currently trading at 1.03294. So that is incredibly important, being above 1.03. Okay, so yeah, weak dollar, dollar yen. Okay, yen strength against the dollar, so weak dollar on the back of that reading. British pound cable again above that key level of 1.21976, currently trading at 122, above the 122 range now, 122.34. Let's look at the plus 500, S&P 500. UK, yes, skyrocketed as well on a very, like I say, risk appetite, good bullish rally for the time being. It's not quite broken that key level, which is on a Fenerbahce as well. 4,190 points is currently hovering over that. But if you look at this candle here, you can see how the market reacted to that news. They reacted very, very bullishly. Gold, okay, initially spiked above and got actually over their 1,800 level, which I got very excited about. Currently now it's just a few dollars above that key level, $1,796.54. Bitcoin also benefited, of course, obviously, because like I said, we had risk appetite on the market, so that makes perfect sense for likes for Bitcoin to benefit when you have risk appetite on the market, as it is considered an extremely risky asset. Shot all the way up to around 24,120 points, currently trading at 23,880. So 24,000. Sorry, I think I'm getting confused. The equities, $24,120, currently trading at $23,888. So yeah, risk appetite currently on the market. Can it last though? Can it last till the reality that the Fed is going to be aggressive in September, and that will still put strain on the economy on the back of that? Or is it the fact that the market's looking at this and going, I know they're going to raise interest rates, I know they're going to be aggressive, but it's going to be a soft landing. It's going to be a soft recession, and a soft recession which we can handle. So are they going to see it like that? Right. On another story I want to talk about is something which is coming out after the market closes, and that is high low. Do you like see what I've done there? High low. Anyway, it's a little something to amuse myself. Anyway, after the market closes, we have got Disney Q2 earnings, and it's coming out after the market close, and this is going to come under a fair bit of scrutiny, because the reason for this, the focus will be on Disney Plus streaming service. Okay, we'll see how many subscribers they still have and how they're performing that way, especially after arch rival Netflix impressed a couple of weeks ago, because Netflix released their Q2 earnings, and the market expected them to announce a loss of 2 million subscribers. Instead, Netflix reported a loss of only 1 million, or just under 1 million subscribers, which is still pretty. It's not great, but it's better than the market expected. So obviously Netflix benefited. So it'd be interesting to see how Disney Plus performs in this area as well. So it'd be interesting to see how that is. There's also a bit of development which could be interesting, is that Walmart, the major US retailer, is discussing with a couple of streaming companies, Paramount being one of them, and Disney being another one. And there's one more as well, Disney being another one, about combining a streaming service with the Walmart membership. So that could be quite interesting. It'd be interesting to see if Disney says anything more about that, especially maybe for a forecast for Q3. So that could be quite fascinating to watch. But anyway, expectation is for it to come at 20.99 billion. The previous earnings was 20.27 billion. So higher than expected, but I think it's going to be mainly about the subscription on Disney Plus. I think that there is expectation that their theme parks will obviously show a growth in profit. So obviously with more traveling and things like that, of that nature happening now. But I think it's the Disney Plus streaming service is going to take quite a fair bit of focus on this report. But let's have a quick look at Disney, see how it's performing. Like I say, in general, the stock market on the back of obviously that CPI reading is fairly bullish in general. Okay, so it did open with a gap initially. It closed yesterday at around about $108 a share, but now it's currently trading it skyrocketed and hit the high of $111.25. Currently trading slightly lower, so a bit about a profit taking maybe. Maybe people position themselves for later's earning report. Like I say, it comes out after the market's closed. Currently trading $109.96. But like I said, I think that's going to be quite interesting earnings report. Disney Plus will come under the microscope. So yeah, that would be quite interesting. It brings me on to a special announcement I want to make. A special announcement. Now, due to you good people, you gave me an idea a little while back. Because often, like I say, if you don't think of a question, you can ask me while we're live on air. You can put it in the comments below, and I'll answer it next time I go live, which I have done a couple of times. But anyway, there was a great question from somebody in particular who said they're trading, they want to know more, and I opened it up to you great people. You find people about, okay, this is an idea. I'll do a tixee tixee special. Okay, a tixee special. Okay, on a subject matter of your choosing. We won't talk about the market so much. Okay, be just a special video, special broadcast, and we'll focus purely on this subject. Now, what are the regular viewers of this little show, SMF 790? They made a brilliant suggestion, of a topic. Okay, and the topic is going to be market jargon. So I'm going to do a special. Yeah, hello. I just mentioned you. Hope you're well. Hope you're good. Like I said, so yes. So like I said, so what we're going to do, we're going to do a brand new tixee Live series. So it's not going to be a one-off. I'm going to do a series like this. Okay, a series of this. And it's called tixee Live Presents #Ask James. Okay, so I'll probably do one every 2 weeks. And like I say, this will be a live broadcast dedicated to a subject matter of your choice, whatever you wish to learn. Like SMF 790, their suggestion, brilliant suggestion. They want to understand a little bit more about market jargon, because I must admit, quite often I get carried away and I use a lot of the terminology in this industry. If you're new to trading, people might not know what I'm talking about. I'm trying to explain as I go through, but sometimes I forget. But I'm going to do a dedicated video on that topic sometime next week, so watch out for that. But it doesn't end there. I want more suggestions. I want you good people to either leave comments on YouTube or Facebook, or say even live on air, and just put #AskJames. I want to know about whatever it is in reference to trading. What is a good stop loss, or what is a good take profit? How do I recognize a support line, or what is a support line? What's the basics of technical analysis? What's the basic of economic events? Why does that affect anything, any topic in relation to trading? Just go #AskJames, and I will do a tixee Live special. And these programs are dedicated to help you understand and dedicated for your education. You get to choose what you want to learn about. Just remember, put in the comments, #AskJames, or put it in the comments on when I do a live broadcast, #AskJames, and we'll do a dedicated video just to the topic of your choice. Okay, so I'm really excited about that. It's a brand new series because, like I said, we've got two series at the moment. We've got the tixee Live regular series, which we do twice a day, obviously. Then we do the tixee Live watch-alongs, and now we're going to do tixee Live #AskJames, which is going to be more educational, but it's entirely up to you what it is. So it's really exciting times to be a tixee Live presenter, and so I'm very excited. Anyway, enough about that plug. But anyway, look out for it. I look forward to your topics you want to learn. Anywho, other events coming up tomorrow morning. We have the US GDP. Expectation is for it to come in a lot lower than anticipated. Negative. So a negative reading tomorrow. So I'd be interested. Don't forget the UK has a number of issues. Not just alone the leadership battle at the moment, who's going to be the new PM in September, plus a number of economic other woes and Brexit, of course. So that's going to be interesting to see how the UK GDP, and not to mention 9.4% inflation. Excuse me. Excuse me again. And the thing that the Bank of England said, recession by Q4, inflation by 13% in October. So there we go. So the UK's got a number of things. So that'll be an interesting event. Happens around about 6 a.m. UTC, so I can't unfortunately do a watch along for that event, but we'll talk about it in the morning broadcast. Then, of course, we have the UK as a US mission and sentiment. Be interesting to see with these recent developments in the job market, on obviously the CPI, how the consumer is feeling at the moment. So that'd be interesting to see as well. So those are the two events to see us out for the week. The market, as it currently stands, the FTSE is currently trading 0.16%, DAX currently trading up 0.97%, and Euro Stoxx 50 currently trading at 0.71%. Don't forget, you can ask me questions anytime you wish, or simply say hello. Say hi, or share me your opinion. What do you think about the CPI? I mean, for the inflation in the United States, have we seen its peak? Is that the most it's going to be? like I say, it was year on year. Core lower than anticipated, but stayed the same as it was the previous month. So what does that mean? Share your opinions, or ask me questions about any currency pair or share you may want to look at. Or like I say, make your suggestion for, a topic for the new series of hashtag Ask James, or simply say hello. I mean, how is your day going? Everybody having a good day, for example? Yeah. Okay. Well, not a problem. Not a problem. Not a problem. Remember, if you think of a question later, jot it in the comments on either Facebook or YouTube. I will reply to them next time I go live. And like I say, if you think of a topic or an educational topic you want me to cover in the new series, hashtag Ask James, just put hashtag Ask James and the topic you want me to do. So simple as that. Anyway, don't forget, I'm back online tomorrow at 8 a.m. UTC. I lost my train of thought then. 8 a.m. UTC. And again, of course, tomorrow at 2 p.m. UTC. So don't forget that. So I'm back online twice again tomorrow. Be interesting to see how the market digests the CPI throughout the session. Be interesting to see how that develops. And so please free and come along and join me for that. And don't forget, as I always say, if you're watching me on Facebook and you enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this little video and found it interesting and useful, and you've put up with me, my over-the-top enthusiasm for the markets, which I just can't help because I love the markets, give me one of those. It's nice to know that you like what I do. I can see I've got a couple of likes already, which I really appreciate. I really do appreciate that. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you out there, trade safe.